Welcome to the YP Investors Point and Figure Charting tutorial. Point and figure charting has stood the test of time, as it has been around for more than 100 years. It is based on the laws of supply and demand. If the demand for a stock is high, meaning more buyers than sellers, then the price of the stock must go up. The same goes for supply. If supply is high, meaning there are more sellers than buyers, then the price of the stock must go down. Let's get into how this is applied to the point and figure chart. X's on the chart represent demand and an increase in the stock's price. O's on the chart represent supply and a decrease in the stock's price. The point and figure chart is made of these X's and O's. Within the chart, each column can contain only X's or only O's. Each individual box in the chart represents a stock's price. Moving up a box increases in price, and moving down a box decreases in price. This is a point and figure chart from YP Investors. Now you should have an idea of what all the X's and O's mean, but you might be wondering what all the other stuff on the chart is. The purple letters and numbers represent the first mark on the chart for that particular month to help track time. 1 through 9 represents January through September, and A, B, and C represent October, November, and December. The year is shown on the bottom of the chart. The boxes with the pluses in them represent positive and negative trend lines. These trend lines act as resistance lines and are hard to cross. The stock price may get close or even onto these lines, but rarely will it actually cross these resistance lines. This is how we can determine the long-term trend of a stock. If the current trend line, which is the pluses, is below the chart marks, which are the X's and O's, then this is called a bullish resistance line, and the long-term trend of a stock is positive and prices should rise. The bullish resistance line is colored green on the YP Investors point and figure charts to show the stock prices should rise. If the trend line is above the chart marks, meaning the pluses are above the X's and O's, then this is a bearish resistance line, and the trend of the stock is negative, meaning the stock prices should fall. Our point and figure charts colored this line red to show a negative trend. Finally, the green and red filled boxes represent basic buy and sell signals. The green boxes represent a basic double top buy signal, meaning the stock prices should rise after the chart hits that mark, so this may be a good time to buy. When purchasing a stock based on this buy signal, you want to make sure to buy at a price that is no higher than the price that aligns with the green box. This will keep your investments more profitable. Also, once there are more chart marks above this green box, then you have most likely missed the rally and should wait for the next green buy signal. Now let's go over the sell signals. The red-filled boxes are basic double-bottom sell signals, meaning the stock prices should fall after this signal. When selling a stock based on this red box sell signal, you want to make sure to sell at a price that aligns with the red box. When you are ready to sell a stock, this will help you sell at a price before it drops. Remember, these signals are a general statistical observation. Just because a stock hits a buy or sell signal does not mean that stock is guaranteed to rise or fall, but it does have a higher probability of doing so. This gives you an educated idea of where the stock price is heading. Point and figure charts are a powerful tool that will help you make decisions on your investments and grow your wealth. Check out the Point and Figure Chart Patterns video tutorial to learn about advanced chart patterns that have higher probabilities of predicting where the stock prices will go. Thank you for joining the YP community today, and good luck on your investments.